has the market gotten ahead of itself? Let's ask Fast Money friend Gene Munster. Gene, what do you think?
Melissa, if you're an investor in the AI trade, and present company included, I would be concerned about a recession. I would not be worried about Joe's bubble comments. That word obviously strikes people's attention, but I wouldn't be worried for a couple reasons. First is that what they said, as you mentioned, that was back on February 20th about that build out being 3 times what they've had over the past or the next 3 years, equivalent to what they've done over the past 10. So consider that a month ago. They had some pretty bullish comments about the AI hardware infrastructure. And of course, what we heard from the hyperscalers at the end of January was that they accelerated from a 20% expectation growth to just above 40. Now, in the world of AI, a month is a lifetime. And so you can build the case that despite what Alibaba said a month ago, maybe things have changed. And so what do we know? Micron's the only company that's reported, despite their stock being down on margin guidance, they raised guidance by just under 4% for fiscal for the calendar year here. And so that's kind of the fundamental piece. But I actually think there's a bigger force in play here that gives me confidence about where the AI trade is. And this is not a race about the hardware build out. It's not about building an AI hardware infrastructure to power today's chatbots and tomorrow's agentic bots. This is a race, and this is what the hyperscalers are thinking. This is a race to get to artificial general intelligence. And we're probably 3 years away from that. That's the game that they're playing. They don't care about what the demand is for these applications 1, 2 years down the road. They want to get to general intelligence, because at that point, you have exponential value that gets unlocked. And there is winner take most as they race towards that goal. And so as long as that target is on the horizon, I think you're going to see some magnificent spending from the Mag 7 on the AI hardware piece.
You know, Gene, when you talk about 3 years to AGI, I mean, it seems like an eternity, again, in this kind of generative AI trade. And I just wonder between now and then, and I'm probably one of these people, even though I'm the silver lining guy on the desk, I'd probably take the over in 3 years to AGI. So I guess my question to you is like these, what?
AGI, can we explain that?
It's basically general intelligence. It could be smarter than Guy Adami in 3 years.
I thought tonight was the show. We should.
But Gene, help us think about like what might happen on that way to AGI if we do have a recession, if we don't find the use cases anytime soon. I mean, these companies have to be somewhat responsive to shareholder demands. And at some point, and we learned this from their earnings just a few weeks ago, when you saw revenue deceleration and you saw these companies stick to those, CapEx numbers, shareholders didn't like it. And they all went down 20% in a straight line.
So I think there's going to be a difference between what happens to the AI stocks in that scenario if we get a recession versus what happens with the fundamentals in the hardware trade. So on the stocks, they'll go lower on a recession. Historically, that has been the catalyst that started the bursting of bubbles. If we even go back to the Tronics bubble in the 60s and 70s, that was the catalyst to that. And so, but your question is about what happens with the hardware piece, and will the hyperscalers basically pull back as they start to see, let's say we do go into a recession. And I think that it's reasonable to think there'll be some cuts to that, but I think that's probably some of the last places to get cut. I do believe what we've seen over the spending from the hyperscalers over the last couple of years is a sign that they believe if they don't make these investments, they could be irrelevant in the future. And so I think that intensity isn't going to change. I think, again, if there's a big pullback, they'll make some adjustments. But I think that the CapEx spending on the AI hardware piece is going to be relatively protected because of that big existential risk that they're facing.
But Gene, I mean, I understand that a recession you think won't impact them, but why aren't DeepSeek moments, and I use plural, why don't they cause you to rethink how much the hyperscalers might spend or how much companies in general might spend? And not only do we have DeepSeek, but we also had Ant Financial saying that it used chips from Baba as well as Huawei to train an AI model that had comparable results to using an NVIDIA chip for 20% less.
Part of the reason is that when DeepSeek came out at the end of January, is that was known for the public at that point. But the hyperscalers knew about DeepSeek before that came out, probably knew about it for 6 months. And they were still through that period. There was a couple earnings revisions where they continued to ramp that up. And so essentially the substance of this is that if you believe that the hyperscalers are competent, if they're strategic, if they understand how this tech works, they're basically saying what they've said over the last 9 months is that they don't believe that, they believe that the scaling laws will hold together, that to continue to move towards general intelligence, that what we saw with DeepSeek was more of a head fake than it was relative to the substance of getting there. And so all these are use cases, these are powerful use cases for some what I would consider tier 2 AI use cases, like with DeepSeek. But to be at that front edge, again, that's where the spending is cutting that front edge. I think it's still going to be robust for the next couple of years.